Okay, let's unpack this. Have you ever looked at an annual report and thought, there's a story in here, if only I had a guide to find it? Well, that's exactly our mission today. We're doing a deep dive into Fondia Pelix's 2024 annual report, their corporate governance statement, and the remuneration report, too. And this isn't just about crunching numbers, it's about understanding a really fascinating business operating in the legal services market. We want to uncover the key insights, challenges, and, their future strategies. Fondia, for those who might not know, is a full-service law firm. They operate across Finland, Sweden, and the Baltics, and they're known for being pretty innovative.
Exactly. And what's fascinating here, I think, is how these reports really give us a full picture. It's not just financial. It's also about the company's culture, its leadership, and crucially, how it's responding to a pretty dynamic market. We'll be focusing on what's most relevant, to help you understand the company's trajectory and maybe some broader legal industry trends too, cutting straight to what matters.
Okay, so let's start with Fondia itself. What's their core business, their model? As mentioned, they're a full-service law firm covering Finland, Sweden, the Baltics. But here's where it gets really interesting. They have this dual business model. Around half their net sales come from what they call ongoing services. Think things like their legal department service, LDIs, they call it,
Dahlia.
or board secretary service, data protection officer as a service, that kind of thing. And the other half, that's from the more traditional assignment business. So they're not just traditional lawyers. They seem to be pushing for these innovative, tech-driven legal solutions. What does this all mean for how legal services are delivered?
Well, if we connect this to the bigger picture, this ongoing service model, like LDS, it really represents a significant shift. It's moving away from just reactive hourly billing. The aim is for more predictable revenue, yes, but also much deeper client integration. It's about embedding legal support within the client's day-to-day, making it proactive. Their stated goal is profitable growth, leveraging technology, sharpening operations, all while focusing hard on the customer and, importantly, the employee experience. It's a modern approach in a field that can be slow to change.
A modern approach, definitely. But how did that play out financially in 2024? The reports suggest it was, well, a challenging year. Overall net sales decreased slightly by 1.8%, down to about 25.6 million euros. And the operating profit margin, the EBIT margin, it weakened, dropped to 5.3% from 7.0% the year before. Adjusted operating profit was around 1.36 million euros, and looking regionally,
Yeah, that breakdown is revealing.
Sweden seemed particularly difficult. Net sales dropped over 15% there.
Ouch.
But the Baltics, strong growth up 37.5%.
Wow, quite a contrast.
And Finland grew, but only modestly, 0.5%. International net sales overall dipped a bit as a share of the total, down to 23%. The reports point to economic uncertainty causing clients to pull back on LDA's reservations, less assignment work, and higher customer churn, too. But it wasn't all bad news. Was there a bright spot amidst these challenges?
Well, this is where it gets quite interesting, actually. Despite those financial headwinds, you look at their customer satisfaction survey results, their Net Promoter Score, the NPS, it stayed at a good level, 61,
61, okay.
which indicates their service concept, that integrated approach, it really does resonate with clients. It's a strong foundation.
Definitely.
But, and this is a big but, you contrast that with the internal feeling. The Employee Net Promoter Score, ENPS, it decreased significantly, dropped from 48 down to 19.
Wow, 48 to 19, that's a huge drop.
It really is. And it highlights a clear, urgent need to invest in that employee experience. You also saw average productivity decline slightly, about 1.2%, mostly due to those growth challenges and lower work volume, especially hitting Sweden hard. Briefly on the balance sheet, total assets were down. Cash was down from about 4.1 million to 2.2 million euros. But importantly, the company remained debt-free, still had a solid 40% equity ratio. So there's stability, but that human element, the ENPS score, that's a flashing light.
Yeah, that gap between the customer NPS and the employee ENPS is really striking. Makes you wonder about long-term sustainability if that internal pressure isn't addressed. So how is Fondia reacting? What steps are they taking in response to this and the wider market shifts?
They certainly haven't been sitting still. For their 20th anniversary, they launched a harmonized brand identity. They kept developing their MyFondia platform, and interestingly, piloted several AI applications. Seems like they're trying to boost competitiveness, efficiency. Into the tech side, yeah.
Definitely. And more directly addressing the challenges, late in 2024, they launched a group-wide savings program. This included change negotiations in Finland, aiming to improve productivity and adjust resources because of the uncertain market. Those talks wrapped up in January 2025, and they expect savings of around 1.3 million euros this year from that.
That's a substantial saving.
It is, and this all feeds into their current strategy cornerstones, focusing on clients and their businesses, people and culture, and maintaining an open, proactive approach to technology.
And if we connect this to the bigger picture,
Yeah.
I mean, the whole legal services market is undergoing massive transformation. You've got inflation, interest rates affecting deals, the incredibly rapid expansion of AI.
AI is everywhere now.
It really is. Plus geopolitical uncertainty, new sustainability rules, ESG, and, of course, fierce competition for legal talent. What's fascinating here is seeing how Fondia's strategic pillars seem to directly address these pressures. Their tech focus tackles AI head-on. Their stated focus on both client and employee experience, even with that recent ENPS dip, shows they know the human factor is critical.
Even if they have work to do on the employee side.
Precisely. And you also see this reflected in the market demanding more advice on ESG and employment law. Fondia's strategy seems like a conscious effort to navigate these external shifts.
Okay, let's pivot to leadership and governance. There's been some movement there too, right? So Fondia is a Finnish limited liability company. They voluntarily follow the Finnish corporate governance code. But there was a temporary deviation noted. Timo Lappi, who is the chairperson of the board, actually stepped in as interim CEO from January 22nd, 2025.
Right, while they search for a permanent replacement.
Exactly. And to ensure things run smoothly, Johan Hammerén was appointed vice chairperson during this period. The board itself has 6 members. It looks reasonably diverse, 33% women, age range 41 to 59, good mix of industry, financial, business backgrounds.
Seems like a solid lineup on paper.
And importantly, in 2024, all board members were independent of the company, and 4 were independent of major shareholders. They were clearly active, met 17 times in 2024. Attendance was high, 94%.
17 times is quite a lot. Shows they were engaged.
For sure. And their focus. Updating strategy, reviewing IT systems, looking closely at AI applications, and driving that operational efficiency, including the savings program we talked about. These weren't just, standard board meetings. Felt like they were really digging in to steer the company through this challenging patch.
Yeah, that intensity, especially focusing on IT, AI, and efficiency while managing a CEO transition, it definitely signals their immediate priorities. Modernize and tighten the belt. Which then raises an important question.
Yeah.
How does Fondia align all this, leadership and employee incentives, with shareholder interests?
Good question. What did the report say?
Well, the AGM back in March 2024 approved a pretty significant dividend for 2023 EUR 0.32 plus an extra EUR 0.20 per share. And for the challenging 2024 year, the board's proposing EUR 0.30 per share. Still substantial.
Okay. And board pay?
Board remuneration was unchanged. Chairperson got EUR 3,500 a month, other members EUR 2,000 a month.
Right.
Stable there. But to link employees more closely, they have an employee share savings plan, ESSP, and another share-based incentive plan. The idea is to strengthen that shareholder-employee relationship, boost motivation. For instance, in 2024, they gave away over 2,000 shares for free to 30 participants in the ESSP.
So giving employees a direct stake.
Exactly. And looking at the former CEO's pay, Harry Savalainen, who's now CFO, his 2024 package included his fixed salary, plus a performance bonus of 9,500 euros based on 2023 targets, and some share bonuses from the SSP. But significantly, no performance bonus will be paid based on the 2024 targets. That directly reflects the year's tougher performance. Clear link between pay and results there.
Right, that makes sense. So looking ahead now to 2025, what's the main focus? What's the plan? It seems pretty clear from the reports. The primary focus for 2025 is squarely on improving profitability.
Back to basics, essentially.
Seems like it. They acknowledge the market uncertainty continues, which makes forecasting demand for ongoing legal services like LDAs quite tricky. But that EUR 1.3 million in savings from the Finnish change negotiations, part of the wider group program that's expected to make a real difference.
It needs to, really.
Absolutely. Their medium-term goals, though, they remain ambitious. They're still aiming for average annual net sales growth of around 15% and an average operating profit margin of about 15%.
Still aiming high despite the recent dip.
They are, and their dividend policy aims to distribute at least 2/3 of earnings per share, but they'll balance that against needing funds for future investments.
Fondia's journey in 2025 is going to be a really fascinating case study. It's all about balancing those ambitious growth targets with, well, market realities and the need for internal transformation, especially fixing that ENPS issue.
That tightrope walk, as you said.
Exactly. They're focused on profitability, keeping customers happy, investing strategically in tech, and addressing the employee experience. All that will be crucial. It's a complex challenge, but they seem to have a clear plan, at least.
What an interesting deep dive into Fondia Flux 2024. We've really seen a company navigating some choppy waters, haven't we? Dealing with market challenges through strategic shifts, focusing on innovation, sticking to their unique service model, all while managing leadership changes. That balance between growth, customer satisfaction, and employee well-being, it's a tough act for any company, and Fondia's reports really map out their path for us quite clearly.
And this raises an important question, maybe something for you, the listener, to think about. As legal services keep evolving, especially with AI becoming so central, what do you think will ultimately be the most significant factor for a law firm like Fondia to achieve that sustained, profitable growth long term? Is it going to be the cutting edge technology? Is it an absolutely exceptional customer experience? Or is it having a highly engaged, motivated workforce? And maybe more importantly, how do those elements need to connect, to intertwine, to really succeed in this world of increasing uncertainty? Something to ponder.